everyone, Donna here from Mortgage Powered Financial Group, and welcome back to the Mortgage Sweet Spot Lender Edition. This series is where we sit down with our lending partners to break down real policy, real files, and conversations brokers don't always get to hear. Every lender has their strengths, their quirks, and their behind-the-scenes magic. Better deals, better relationships, and better results. Let's jump in. Rachel, I am literally so excited to have you here. How's the week? I know it's Monday, but...
It is the start of a good week because my sick kid is back at school this week after being home all last week. So it's a fresh new week and I'm ready to rock and roll. That's
got to be hard trying to be a BDM with I'm not speaking out of school. You're a single mom.
Yes.
So you have to do all of the things. What does that look like for you?
It looks like juggling, balancing, calling in support when I need it, and working with people who get that I'm a single mom and give me a little bit of grace here and there when I need it.
I mean, you've never really asked for grace, but your child is delightful and I love him. So for those of us, or for those of them who haven't worked with you yet, let me know who you are and where you're from.
So my name is Rachel Major and I am from MERIX Financial, and I have been a BDM with MERIX since January of 2020. So coming up on my 6-year anniversary.
So you're a COVID baby?
Yeah, basically I started my career in COVID and spent the first 2 years of being a BDM doing a very different role than what it's looked like these last 3 years.
What is one thing you wish brokers knew about MERIX and their lending process?
That's a really good question. What do you mean by lending process? Like just as far as...
If you talk to brokers all of the time, what is one thing that people say, oh man, I didn't know that about you? I know what it is.
Trailers.
100%.
Absolutely trailers.
Okay, so MERIX is part of a larger company, yes?
We are part of the MCAP group of companies. So that is MCAP, RMG, and MERIX.
Okay, so MERIX offers trailers. And why are trailers important for brokers?
Trailers answer two questions that I think are heavy upon brokers' minds. What do I do when it's slow? And how do I get paid more for working less? So trailers allow you to build a residual income stream based on a book of business renewing every year.
So when you send renewal offers to my clients that are better than what I can get on the market, and my clients choose to take your renewal, I get paid?
Yes. Indefinitely for the life of that mortgage until that mortgage is paid out in full or moved to another lender.
Are you finding that more people are just staying at renewal than before?
Absolutely.
Why do you think that is?
Because I think that qualification is tough. Houses aren't appraising. People are losing jobs, worried about job security. Unless there's a strategy at renewal where you're really fixing their looking at the whole financial picture, I think it's just easier for clients to renew. They also fall in love with their lenders when lenders prioritize customer service. And through our online portal and wonderful customer service that is available at the fingertips of the customer without even having to pick up the phone, a lot of people really don't want to lose those features.
I think, though, that brokers are really dropping the ball when it comes to client communication after closing, which makes it really, really easy because you literally have all of the features that they want at their fingertips. Mm-hmm. When your renewal department reaches out to your clients, how often are they hearing, oh, I haven't heard from my broker?
Oh, gosh, I would love to know that statistic, but it's very high. The difference with MERIX, though, when we do place it in the trailer model, whether or not they've heard from their broker or spoken to their broker is still getting paid on that mortgage if we retain it.
So if I put a client in a 5-year deal and I choose the trailer model, that means I get less money today and then I get paid in perpetuity as long as the client stays with you.
Exactly.
So when the client stays, when they choose another 5-year renewal, for example, I get a lump sum for the 5 years, or do I get something every year?
You get 20 basis points every year for the life of the mortgage once they've renewed.
Regardless of what term they take.
Yeah.
That's kind of amazing.
It is really amazing.
And we as brokers have to select who on the submission platform.
You would select MERIX trailer instead of the MERIX upfront.
And is there reporting that those of us who maybe accidentally selected MERIX trailer a couple of times this year not knowing?
Yes.
So there will be a report that will let us know which mortgages, or how do we as brokers track that?
So on your scorecard, they are separated between the trailer deals and the upfront as far as how much funded every month under these different categories. And then we have reporting on the back end that keep track of that trailer income. For the first term, during that first term of the mortgage, you'll earn 5 basis points every year on the anniversary of the mortgage, in addition to the 87 you earned up front. So it'll start giving you a little bit of a taste of what that passive income looks like.
So in January, we get 5 extra basis points every year?
On the anniversary of the mortgage renewal.
Well, that's pretty cool.
Yeah. So you get that during the term. And then on the anniversary, when the client signs back that renewal agreement, that 5 bips turns into 20 and just continues.
At the 20.
Yeah.
I think it's really important because as brokers, we need to do a better job building wealth and creating a sellable business. Are these trailers transferable should you choose to sell your book of business?
It depends on how the individual agent is signed up. So when we have pooling teams, we can sign individual agents up as co-agents. That would mean that as part of the bigger pooling team, their trailer income is going to be earned in cash and belongs really to the brokerage if they were to ever leave. But there are options of signing people up for their own individual accounts if that's something they really want to invest in. To have your own account, you want to be doing 5 to 10 million on your own every year in the trailer model for it to really make sense.
So if you choose to set your own account up because you want to keep the trailers with you, do you still get the benefit of pooling with your team, or do you lose that?
No, you lose the benefit of pooling with your team, and you're going to choose the trailer model as your...
Is there an option for the brokerage and the cash model to be transferred, or no?
No.
Good to know. I think it's something that we really need to learn more about because there's not very many lenders that offer this, but creating a business that's worth something so that we can retire. Now, my understanding is we must be licensed to continue getting our trailers. Is that true?
It's a bit of a misnomer because there's different ways of setting it up, but through a brokerage like this, if somebody were to leave the industry, you can still forward them their cash trailers that they're supposed to earn as if you're paying an assistant. So they don't really have to be licensed.
That's an agreement. MPFG.
Of course. That's an agreement with the brokerage. The other thing is they can actually be paid into estates. So you can have it as part of your estate planning that any future income from your trailer account would be paid into the estate.
I would really like to get you back just to talk about trailers. If that would be cool.
I think it's a really cool part of business planning for agents, and depending on the level of agent and how much volume they're producing, it can be a really advantageous. We also have the option of that trailer income going into what we call our X rewards account. That would be for individuals only. We wouldn't set that up on a pooling team because it's just too complicated to divide out whose X rewards belong to
That's
who.
Fair.
But essentially, when you accumulate them in the X rewards account, instead of getting that income on the anniversary date of the mortgage, you can hold that income in the X rewards account and not realize it until you make that withdrawal.
I heard that somebody paid for their kid's wedding using their X rewards.
I have a broker right now who has $210,000 sitting in his X rewards account that he can just withdraw whenever he wants.
And he leaves it there, and then you're taxed when you get the money.
Exactly.
So that could be an extra year or two without an income.
Mm-hmm.
With actually an income. That's brilliant.
Or we had a lot of, at the beginning of COVID, one of the things I heard about a lot were agents withdrawing 30, 40,000 to cover the salary of their assistant, because at the beginning of COVID, I mean, we ended up getting that huge boom, but there was 6 months there where nobody knew what was happening. People were closing their offices. They were laying off their staff because no one was going into homes and looking at homes. And so the market kind of stalled, and then it exploded. And everybody who let their assistants go was struggling, and everyone who took out their extra awards and, was able to kind of handle that with a bit more smoothness.
Not that I want to wish a pandemic on anybody, but I was driving in this morning and I literally said, I miss the days of the pandemic when I didn't have to see people or talk to people. Where do you think the mortgage market's going to go in the next 12 months?
Next 12 months. I think we're going to be looking at a lot of what we've had for the last 12 months, if I'm being totally honest.
So more hard?
Yeah, I think the economy is going to be a bit harder this year. I think we're going to have to be a bit more creative in where we're getting our business and how we're strategizing around it. If I were an agent, I wouldn't be going after switch transfers from banks. I would be going after switch transfers from credit unions and B lenders and alternative spaces where I can really, there's no competition there. I'm not going to lose that deal at the last minute because I get undercut by the A lender.
One of the fun things that I've been doing, if I have somebody that wants to do a switch from a large bank, is I actually make them go to the bank first to get the renewal offer. And then they come to me with the renewal offer. So I know what that is. And I come from something is better than nothing, so I will buy it down. So for those who don't know, buying a rate down is using your commission to get a lower rate for your clients, so that I secure the clients. But what I'm going to do is I'm going to sell the product. I'm going to sell all of the advantages, the prepayments, the online, the warranties, everything that comes with the mortgage. So the clients are really, really excited, to the point where when they go back to the lender or the payout statement is ordered because we are completing the transfer, 90% of the time, the client is mad because if you could have given me that rate in the first place, why didn't you? And because I've spent time building the relationship with the client, they're now my buddies. So most of the time they're not leaving. So that's a trick that I would like to give to other people.
Well, and Donna, that's the difference between selling on rate versus selling on solution and product and actually understanding what matters to your client at the end of the day. When I was a mortgage agent, I used to ask clients to rate mortgage features on a scale from 1 to 10. And what I realized is they didn't know what 90% of the mortgage features were. So I think as mortgage agents, we have a really cool opportunity to educate our clients on what a mortgage is, what it's made of, in a way that the bank is not able to. And it allows us to build those relationships and capture that client for life.
The biggest misconception in this industry is what your mortgage can do for you. Everybody is so rate specific. And sometimes when you show, like I say all the time, the cost of getting into the mortgage is not as important as the cost of getting out of that mortgage. Divorce is a thing. More than 50% of mortgages today end in divorce. So unless you're choosing to go into a variable rate product and you're in a fixed rate, taking a 5 basis point rate cut with maybe a bigger bank could end up costing you twice as much on the penalty on the other side. Now, I'm not saying that a bank isn't for everybody. We use banks as well, but I want my clients to understand what that could look like for them. And sometimes, it could be as low as $7. Like, does $7 a payment?
Really?
If life happens, you could pay $12,000 in penalties, or you could pay $26,000 in penalties.
To me, it's the same as life insurance. Like, you're paying maybe a little bit more today to protect yourself for tomorrow.
The number of people who don't feel like life insurance matters, or they can't afford life insurance. If you can't afford life insurance, you shouldn't buy the house. Right? Like, what types of...
we digress.
We could talk for hours. What type of clients are best served by MERIX?
That's a great question. With the trailer model, I always recommend, you want to look at clients who are maybe their kids are in elementary school, they're well established in their neighborhood, they're not looking to upsize. This is their final home. That's somebody who's got a goal of just, I want to pay down my mortgage over the next 25 years.
But you have a child and I have 2 children, and children are very expensive. So are those really the ones that stay forever? Like, aren't those the ones that I refinance
internally, and then you get paid again on the upfront, and it goes back into the trailer model.
I'm sorry, what? Can you say that again?
So if you add $10,000 or more to the mortgage,
so the client would come back to me. I already put them in a trailer model. I'm going to resubmit it as a refinancing, adding $10,000. They go back into the trailer model, and I continue to get paid.
Yes.
Does the client pay a penalty?
They would pay a penalty in that case, yes, or we would blend it into the rate.
So we would do a blend and extend.
Yeah.
So again, it goes back to making sure that you have a relationship with your clients. So that when your clients, not even the relationship with the clients, understanding the product that you put your clients into and how it could best serve them and you into the future.
Absolutely. And with the MERIX trailer model, if that client did reach out to us and said, hey, I want to refinance, we would say, oh, your mortgage is with Donna Thornton, so make sure you go back to her and talk to her. And unless they unless they were like, we don't want to, then we obviously would service that client. But we're going to provide your contact information. We're going to encourage them to go back to the broker who placed the mortgage with us in the first place.
Do you have in-house servicing for them?
We do, yes.
Okay. If you could wave a magic wand and fix one common issue in broker submitted files, what would it be? And don't say picking up front when you really want trailer.
No, I would say the thing that I see a lot are just people leaving things to the last minute. And if I could wave a magic wand and say, get all your deals broker complete within 10 days of submitting them, that's going to create a smoother experience for everybody.
Why does that matter to you? Like for us, my deal closes on January 7th. Why do you want it complete on the 17th? Why?
Because it allows us to continue to service you and other brokers at a high level. So when a deal comes in and it's not broker complete 10 days before closing, now we're starting to rush. So we're going to now put underwriting other deals on hold to pick up that deal, review the documents, make sure it's good, do the instructions, get everything going on this timeline. So that last minute, also, whenever we have last minute docs, you're 10 times more likely to get flagged by internal investigations. So that's looking for fraud. That's a huge red flag for fraud, is those last pushing docs through at the last minute. So then things slow down. Your deal might not close on time, and it creates a stressful experience for you, for me, for your client. If we have that deal broker complete, we're not doing verbals. We're not double checking that they're still at their job. We're not re-pulling credit. The deal's going to fund a lot smoother. We also pre-fund. So if the deal's broker complete, solicitor complete 5 days before close, we send the lawyer the money in advance. So on closing day, they're not scrambling for the funds or waiting for that transfer. It's in their bank account.
So they could get their keys at like
9 a.m. instead of 5 p.m. at Friday afternoon when the moving truck says, hey, sorry, we're going to have to come back and unload all your crap on Monday because we're done for the day.
You know, I set that expectation with my purchases, and I say, listen, like, I'm going to do everything that I can to make sure that this is ready to go, but expect to get your keys around 4:00. Don't plan for anything other than that. And, you know, if you get them sooner, great. Other than last minute submissions and late documents, what is one thing that brokers could do today that would make your job easier?
You know what? I think a big thing is just being engaged in learning about the policies and the products and what fits, and wanting to understand the mortgage product.
So not just throwing a deal at the wall and hoping it sticks?
Something like that.
Fine. Tell us about a file where you were able to get creative and think outside of the box and get an approval for a client that you wouldn't have gotten otherwise.
Ooh, I like this. Well, MERIX has a lot of policies and niches that allow us to work with a file.
But policies and niches seem to be hard, Rachel.
They can be. But just the one that I'm thinking of right now is just with, if it's an owner-occupied rental. I had a file where this woman's trying to purchase the house she's living in. That's a high ratio purchase. They're looking for the 30-year AM. She's a first-time home buyer. She's been renting this place. And with a 50% add back and property taxes in and her debt, there was no way that she was able to qualify. The ratios were just getting pushed out too far. So we sat down with the broker. We opened the app together, and I was like, okay, well, did you use the 85% add back? And he's like, no, just 50. I'm like, okay, and you remove property taxes and heat? He's like, no, I left them in. I'm like, oh my goodness. All right. 85% add back. Let's remove property taxes and heat. And we were able to use that policy to kind of help with the file. As far as like more creative type of things, like with
we don't get creative at MPFG, but there are policies in places and there are ways of understanding how it would work to maybe, we didn't consider this, but we're looking at this, for example.
I know for one, we had a nurse who was working one part-time job for over 2 years. And then they had another part-time job, and we were trying to use the 2-year average, but they had recently, they were working 3 part-time jobs and they had recently gone from the 3 to the 2. We couldn't get the 2-year average to really make sense when looking at each job individually, because one job, we're decreasing, but this job we're picking up more hours because we're not. So I was able to get the underwriting to kind of take a step back and say, okay, stop looking at this as a 2-year average of each individual job. Let's look at how many hours this person is working total as a nurse per week. And we can see that it's consistent when we kind of step back and look at the whole picture.
So in the not so distant past, lenders were allowing you to use part-time income if you had guaranteed hours and weren't on probation. I've noticed a lot of lenders are now moving to, it must be 2-year average. Are you on the 2-year average, or?
Only if it's not guaranteed hours.
So if it's not guaranteed hours and they've had the job for 4 months, you will still consider
Absolutely.
it? What new products, tools, or initiatives are you most excited about right now?
Well, I really love our non-subject rental worksheet. I talk about that a lot with our broker partners because it allows us to take the shortfall out of the ratios instead of having it as a liability. So I was chatting with a broker the other day about that. And
so you add the shortfall to the liabilities?
No. So basically, let's say you had $3,000 or $4,000 of income. $3,000 was your GDS. If you add $1,000 a month to that, it was the ratios were 33%. But if you take the $1,000 instead of as a liability, you take that income and you drop it by $1,000 a month, then my ratios were 27%.
I did not know you could do that.
Yeah.
See, I learned something new today. Yay. That's pretty cool.
So that's one of my favorite tools because you said, it can really change.
So does that work for spousal support?
We don't do that for spousal support, unfortunately.
Not yet. Maybe
Not
one
yet.
day.
Maybe one day.
Added the wish list.
But with that non-subject rental worksheet, another one that it's really great for are anybody who's owner occupied and looking to keep their owner occupied and convert it to a rental and purchase a new owner occupied property, because we can wash out that current property on the worksheet with just a future dated lease agreement.
Oh, wow.
So it allows people to really maximize their purchase potential on that next home.
I also think that you are one of the only lenders that will do ADUs, or no?
Oh, yes, we will. The accessory. I had a minute there where I was like, that acronym, AD. Yes, we will do the accessory dwellings as long as they meet certain criteria.
And what does that look like?
I believe they have to be laneways, over a garage, or be sort of normal for the area.
So are you seeing a lot of those? Because I know that there was a huge uptake, but then I read some reports where cities and municipalities weren't actually releasing building permits to do them.
I have not seen a lot of them, to be totally honest.
But it's good to know that you do have them.
Yes.
Which is
we
awesome.
Allow the income from them. And
then would it be 85% because it's owner occupied plus rental?
Mm-hmm.
That's really sweet.
Yeah.
So that's an opportunity to get people to stay in a house and earn additional income, maybe for kids that are never going to leave our houses.
That actually leads me to another one, because thinking of kids, we will use rental income from family members. We will just require additional due diligence. So we may need the bank statements actually showing the money going, but we don't. We will allow that as income to help service a file.
That's amazing. I do have a lot of clients right now, me included, thinking that when my kids go to university next year, instead of renting, buying a condo. So that would be very helpful for us as well. Mm-hmm. What's your number one piece of advice that you want to give to brokers going into 2026?
I feel like I covered it a little bit already with getting the deals broker complete early.
But you're really big on building relationships.
Yes.
And I feel like this industry doesn't do that enough. So maybe that is what you want us to do. Not be transactional, build a relationship, get to know your clients.
Okay, you know what? I will say this.
Or is it because we're all really, really good and everybody?
Okay, so this is what I was going to say. I feel like I have a unique opportunity in Southwest Ontario to work with a different kind of mortgage broker that is not transactional, that is more about building that relationship for the life of the customer. You want their referrals. You want their kids coming to you. You want them to call you before any major financial decision and ask you how it's going to impact their ability to qualify at renewal. Or, I knew when I was at CIBC as a financial advisor, I had one person come in and ask me about which cell phone plan they should get. And like from a financial planning perspective, but I was like, you really obviously respect my opinion if you're asking me what cell phone plan.
I had a client last week call me and ask me if it was okay for them to buy a car. Their new monthly payment was $18 more than their last monthly payment. I'm like, you go live your best life, Sally. You go live your best life.
Get that car. But yeah, so I think in the GTA, it can be a bit more transactional, a bit more rate focused. In Southwest Ontario, I see brokers doing a lot better jobs of building those relationships.
It's hard. It's hard. We have to.
You have to, because you want the repeat business. That's where you're going to earn all your income.
But not just with our borrowers. Also, the relationship that we have with our lenders matters, right?
Absolutely, because you build a good relationship with a BDM, and that BDM is going to be able to help either put a spotlight on you with management, as somebody who's up and coming, help you with exceptions, help you get things done, escalate things for you. Now that I've been with MERIX for 5 years, I know who to go to in funding, who to go to in renewals, who to go to in customer service. You start learning those tricks, and then having that relationship with the BDM, you get access to all of those little tips and tricks as well. So I would say also, instead of always shopping for the best rate and flipping between lenders, pick a few and really get to know them, really get to know their products, educate yourself, go on the calls, book calls with your BDMs. I would love, if you've got a product you want to dive deep in, book a one-on-one with me. I would love to go into that with a broker. Be proactive with those relationships and reach out and show you're interested and you want to learn. And you're going to build some great relationships and have some people who are really in your corner.
All right, let's get to know Miss Rachel now, shall we?
Uh-oh.
What's your coffee order?
Like at Starbucks?
Sure. Is there anywhere else to buy coffee?
My Starbucks coffee order is a half sweet caramel macchiato made with oat milk.
Fastest approval you've ever seen?
Oh my God, 2 hours?
I got one in 23 minutes from one of your underwriters not too long ago.
23 minutes.
Funniest reason a deal couldn't proceed or had to be reworked?
Funniest reason. Oh boy. You might have to come back to me on that one.
If MERIX had a theme song, what would it be? I had an underwriter. I had a BDM sing.
I was going to say, you're not going to get me to sing. You don't want that. I don't know. Something about winning.
Celebrate.
Bitch better have my money.
There you go, Maddie. Use that one. One policy you change instantly if you could.
Oh, the internal switches. Right now, if you have an MCAP uninsured mortgage, but it could be insurable if you switch it, I can't switch it in as insurable. It has to stay uninsured. That one drives me nuts.
It's because you see all the things. If you weren't a BDM working with MERIX, what career would you choose instead?
I'd probably do something in social work or psychology. I love working with people and helping them unlock their full potential and understanding them and getting to know them and building those relationships. So probably something in those fields.
One lender myth that needs to die today.
That the underwriters are mad at you or don't want to do your deals.
But they are when you give them things last minute and you don't tell a full story.
Well, that's fair.
What's the wildest can you make an exception request you've ever received? And it better not be one of mine.
Oh gosh, no. The wildest, definitely around income, being able to use certain types of income. Can you use somebody who's
variable,
just started, has no history in the industry. It's like,
but they're a good person.
But they're really good people.
On a scale from 1 to absolutely not, how do you feel when someone calls you and they haven't looked at your rate sheet?
I don't mind it too bad, because I feel like sometimes things change so quickly. There's a lot going on. But yeah, it does make me giggle when people email me, especially, and they're like, "What's your best rate for this deal?" And it's all there online. You can find it faster than waiting for me to email you. I don't mind emailing you, but
just so everybody knows, if they don't feel like searching the inbox, they can log into the portal, because the rate sheets are right there, right?
Right there.
It's pretty easy. You don't hide them.
No,
you absolutely don't hide them. If you could ban one type of deal from ever hitting your inbox again, what would it be?
Ban one type of deal from ever hitting my inbox again. Something that we do. Probably.
Or maybe you don't do, or you don't do well, or that you see.
Ooh, I hate the investor special, the wonky homes the flipper homes. Those ones are always ones that I don't enjoy seeing. If I could answer for the underwriter, probably deals that have 10 non-subject rental properties, even though that's what I'm out there selling. So
it's a lot of paper, Rachel.
It's a lot of documents.
Speaking of rental properties, do you have a maximum number of doors?
We will allow up to 10 properties total in the port, like owner occupied plus 9 rentals.
So a rental are you talking doors or properties?
Properties.
So if there's 3 units, that's 1 property?
Yes.
Fabulous. Which is worse, a deal with no story, a deal with no documents, or documents submitted 2 days before closing?
Documents submitted.
I'm guilty of doing all 3. Documents
submitted with 2 days before closing are just stressful. But deal with no documents, I would say, is probably... You're talking on submission,
So I collect all docs up front, but I don't upload them until I get a commitment.
Yeah, I think that's okay. As long as you have the docs and you're reviewed them. The ones that drive me nuts are when they submit them and then they get the docs and then they come back and they're like, hey, we have to now change this and that and this and that. And it's just like, whoa.
And is it true that every time we make a change, it needs to go back to the insurer if it's an insured file?
Yes.
And that could result in a decline?
Absolutely.
What's one thing brokers think impresses you, but definitely doesn't? I think I know what the answer is.
Me personally?
Yes.
I mean, I care more about who you are as a person than your numbers or your volume or anything like that. I'd rather work with good people and help them unlock their potential and become big producers than work with a bunch of big producers who have bad attitudes.
Which is exactly what I thought you would say. If lenders had a private group chat, what would everyone be complaining about today?
If lenders had a private group chat, I think for me, it's the brokers who aren't able to accept accountability for their role in the deal or where it's gone wrong.
Is it an accountability thing, or is it a lack of education?
I mean, I think it can be both. I think there's definitely mistakes that get made and opportunities to educate better. And you'll figure that out pretty quickly with how that broker reacts to the issue when it comes up.
So again, being a kind human.
Yes.
Gotcha. What's the funniest reason a broker has given you for a deal absolutely has to close in 48 hours?
Funniest... I haven't had too many funny ones. I had one where it had to close because they had to get the ex off title, because if the ex didn't come off title, he said it was still his house and he was allowed to go in, and there was a restraining order. And yeah.
That seems like a lot.
It's a lot.
If you had to create a new tagline for MERIX based on how brokers actually use your products, what would it be?
Well, it would be definitely about trailers and making passive income.
How much of your book of business is trailers versus not in trailers? Do you know?
I know me personally, for my portfolio, is about 60-40.
Trailers versus not?
Yeah. Huh. Other people are flipped the other way. But I'm very passionate about it and talk about it a lot. So
you really do.
I really feel and I've seen it work and I've seen it save people. So I just want everyone to have that kind of level of protection in their income and in this industry.
We just don't know. And life is hard. And what I think a lot of people don't think about is sometimes you lose points now to close the deal. These clients may not qualify at the end of their term, right? So even if you want to help them, you might not be able to help them. And if you give it up today, you might not necessarily realize that you've lost it today.
I've sat down and done the numbers because I'm a numbers person. And if you place a $500,000 mortgage with a 25-year AM and you amortize that over at a 5% interest rate over those 25 years, and I take that mortgage balance every 5 years and I pay myself 110, and I would argue most people don't get full comp on a switch because you end up buying it down on somewhere, some form. But let's say I got full comp every 5 years on that remaining mortgage balance. I'll make $19,500 over the life of that mortgage by switching it every 5 years at renewal. If I placed that mortgage with MERIX and let it sit for 25 years, I'd make $16,500 and do one mortgage application.
So you'd make $3,000 less.
Yeah.
In the trailer model.
Mm-hmm.
But you don't have to do any of the work.
Mm-hmm.
And it just gets paid.
Mm-hmm.
It's a no-brainer.
Right.
If you could send one anonymous message to every broker in Canada, what would it say?
Treat your clients better. Sorry. I love you guys. But, you know, it's like, when's the last time brokers have really sat down with their clients and gotten to know them? Or
clients don't want that anymore.
Yeah.
So I used to, before COVID, I used to meet with all of my clients at their dining room table, and I would get to know their kids and their cats and whatever, and I'd ask all the questions. It was so bad that when COVID hit and the world shut down, I literally cried for days because I thought my business was going to be over because I had done something for 15 years one way and it was no longer being done that way. And I thought for sure that was the end of me. And obviously it's not. We're still here and we're still kicking, but you just have to get creative with how you have those conversations. And, you know, you just have to have different touch points with them throughout the process.
To me, it's more like be a dream maker and not an order taker. Don't let your clients boss you around. You're the one who knows the industry. You're the one who knows what's right for them. You know what product. I used to say to my clients all the time, I don't want to do something that'll make you love me today, but hate me in 2 years when you realize you can't sell your house or you can't refinance or you can't, you know, there's a $20,000, $40,000 penalty associated with making a change. So
like I shouldn't have listened to my husband when he insisted on a 3-year mortgage and now I have a $26,000 penalty.
You knew better.
What is the most dramatic reaction you've seen when you've quoted a rate?
I mean, our rates are usually pretty good. So most of the time I maybe that's a little bit out, or, ooh, okay, Rachel, I might have to send that somewhere else. I can't sell 30 bips. I can only, you know. But
the benefit with MERIX is we can have float downs, right? So if we've got a longer closing, how many float downs am I allowed to have with you?
So I can personally approve the first 2, and then the third one gets routed to management, but technically unlimited as long as we're in a position where we're working hard to save the file.
So again, a story.
Yeah.
So put your client in, and it works backwards too, right? Because I've done this. I've had to buy rates down.
And then you float it down and keep the...
And then when the rates come down, I just message you and you just increase my commission. Mm-hmm. The client doesn't need to know. They still have the rate that they're happy with, and I still get sprinkles for my donuts.
We like sprinkles.
We absolutely do. Where can brokers reach you or learn more about your products?
So email or my phone. So rachel.major@merixfinancial.com or 519-537-0979 is my cell phone. And you can text or call.
Amazing. Any final sweet spot wisdom for brokers listening today?
Consider MERIX as part of your lender profile for passive residual income. For rentals, we have really great rental policies and some fantastic switch opportunities, like where we can switch from a MIC or a private lender into an insurable mortgage. So we're here to listen to the brokers. We want to create great broker relationships. We want to be part of your business, part of your success, and part of your broker family. So
you guys have done a really great job at that. I feel like I am part of of the MERIX family, and I'm just a lonely broker in Burlington. So thank you for listening and knowing us as much as we know you, because you, my friend, are a class act.
I appreciate you, Donna.
So that wraps up another episode of the Mortgage Suite Spotlight Lender Edition. A huge thank you to Rachel Major for the insight, the honesty, and the lender side wisdom. If you enjoyed this episode, share it with a broker who needs a little sweet spot clarity in their life. Thanks so much.
Thank you,
we'll see you next time.